Hi everyone, this is Mrs. V. Chen. Welcome to my Form 6 Costs Accounting lesson number 4. Today is 27th August 2020. Okay, so today's topic is about absorption costing and marginal costing. So here I have the first example to show you what is the difference between absorption costing and marginal costing. Okay, so before we look at the difference, the first thing, in this example, we have these assumptions. We assume that we don't have any opening inventory, closing inventory, and also this company producing its own product instead of buying the product, the finished product from the supplier. Okay, and look at this production costs. So that the components for production costs consist of direct material, direct labor, and factory overhead. Okay, next I'm going to show you the income statement under absorption costing and the income statement under the marginal costing so that you will know the difference between absorption costing and marginal costing. Okay, so the first item in the income statement, we have sales, and then also we have sales here. Okay, there is no difference between sales. All right, so next, what about cost of goods sold? Okay, so since we don't have opening and closing inventory, so that the cost of goods sold will be simply the production costs. So before we look at the income statement, something very, very important in this chapter, it is very important, make sure that you know how to classify the costs behavior for each item. So what is cost behavior for direct material, which is variable costs, and direct labor, also variable costs. Okay, variable cost means the more products we produce, the more material we need to use and the more labor we need to use. Is that right? And then what about factory overhead? Factory overhead is a kind of mixed cost, so that consists of parts fixed costs and parts variable costs. Okay, now you can see the production costs under absorption costing. We have all these components being incurred in the factory for making our products. All right, so this is total cost of goods sold, and then we have sales minus cost of goods sold, and then we get gross profit here. Okay, which is exactly same as the income statement that we have learned before. However, when we come to marginal costing, so we have production cost now, here direct material, direct labor, and variable overhead. But however, what about fixed overhead? Fixed overhead will not be counted as production cost under marginal costing. However, fixed overhead will be here in the profit and loss account. Here, fixed overhead. So why we do that under marginal costing? So here we have the rationale of marginal costing. There is another name for marginal costing. We call that variable costing as well. Okay, and we only include variable costs, manufacturing costs, as product costs. And what is meaning product cost? This manufacturing cost actually same as production cost, and this is also the value of inventory. So the value of inventory only consists of variable manufacturing costs. Okay, so why we do that? Because which one is relevant to decision making? Only variable costs are relevant to decision making. Is that right? Variable means if we want to produce one more unit, only variable cost will be affected. But however, what about fixed? Fixed, anyway, it is there. Okay, it will be incurred regardless of whether there is production cost or not. So therefore, the treatment for fixed costs here, fixed overhead, will not be included in the trading accounts under marginal costing. Next, we come to other expenses, like we have administrative expenses, selling and distribution expenses. So one more time, what is so important? The cost behavior is very, very important. So for admin, usually it is a kind of fixed cost, and then selling and distribution is kind of mixed. Mixed means we have partly variable and partly fixed. Okay, so which one is relevant to decision making under marginal costing, which is the variable cost? So therefore, we have to add variable selling expenses here too. This is also variable cost. So therefore, we have this figure. We call this figure total variable costs. All right, and this is total sales minus total variable costs. Now we come to this Okay, we don't call it gross profit under marginal costing, we call it contribution. So therefore, under absorption costing, under marginal costing, the gross profit, okay, changed to contribution under marginal costing. Okay, and then what about the fixed part? The fixed part for selling will be here, fixed selling expenses, to be treated as a kind of expenses under marginal costing system. All right, so if it is income statement under absorption costing, so we just put admin and selling expenses, and then we don't care whether they are fixed or variable. We just do it as what we have done before under financial accounting, and then we treat it as normal expenses, okay, and then we get net profit in this way. However, so what about marginal costing? Since marginal costing is used for decision making, and what cost being irrelevant to decision making, we will put all the fixed costs here. So what's left here for expenses, which is administrative expenses, which is fixed. Okay, so therefore I get total here. So what is total here? Total here means total fixed costs. So finally I have contribution minus total fixed costs. So this is fixed costs. So I have net profit. So under under marginal costing system. Okay, all right, so therefore let's look at the difference again. So we don't call it contribution under marginal costing, however contribution replacing gross profits. And then for the expenses here we change it to fixed costs under marginal costing. Okay, next we look at the background and the rationale under absorption costing, so which is a costing system that includes both variable and fixed production costs as the manufacturing costs and the product costs. So therefore you can see our product cost here consists of what? Both variable and fixed. And the reason for doing that is here. It is believed that products cannot be produced without resources provided by fixed manufacturing overheads. So you can see what is the major difference between absorption costing. Absorption costing is used for reporting, like we do in financial accounting. But however, what is the purpose for marginal costing? The purpose is mainly for decision making. So since the purpose for marginal costing is for decision making, and what costs being not relevant to decision making, so which are the fixed costs? So how do we treat fixed costs under marginal costing? We treat it as period costs, so which will be written off in the profit and loss. So therefore you can see this is under marginal costing system, right? We have all the fixed costs which is not relevant to decision making will be treated as period costs in the profit and loss. So that's why we show the fixed costs in this way. This is the profit. This part is the profit and loss accounts, and then we call this period costs. Okay. All right. And for absorption costing, this is the usual way, the normal way. All right. So this is also expenses. Okay, as before, and then we have another name. We call that period costs. Same. All right, as what we use, but we just add another name for period costs. Okay, and finally, we can have another formula to work out contribution. And what is the formula of contribution? You can see contribution is same as all the sales minus total variable cost equals to contribution. And this is only for marginal costing. So we have another formula for marginal costing. Okay, I think this is the first example. Okay, all right, so I will show you more examples in the next lesson. Okay, I think that's all about today's lesson. Thank you for watching. I'll see you next time. Bye bye.